Welcome to Alpha Recap, your post-market rundown from stockalpha.ai. Markets closed mixed today, and we had some punchy sector moves that mattered more than the headline indices. As always, if you have questions, you can reach us at stockalpha.ai. Ready to dig in?
Absolutely. Plenty to unpack. Big picture up front. A mega cap name sold off on heavy volume while silver popped. That alone set the tone for some rotation and hedging behavior across the tape.
Let's start with the biggest single mover. Nvidia finished the day down about 3.4% to roughly $174.19 on unusually heavy volume, about 203 million shares. That wasn't a quiet sell-off.
Right. Heavy volume like that suggests traders were actively repositioning. For folks listening, heavy volume during a drop can mean two things. Either big holders were selling, or options expirations and hedging forced more shares into the market. Either way, that raises short-term volatility risk for anyone concentrated in AI hardware names.
And while Nvidia was taking heat, silver exposure via the iShares Silver Trust climbed about 2.9% to near $79.17 on high volume, roughly 128 million shares. That's the classic risk-off into something tangible move.
Exactly. When a mega-cap growth name weakened and a commodity exchange-traded product rallied the same day, it often pointed to portfolio rebalancing or hedging rather than company-specific news. But whether that metal move sticks around depends on follow-through flows.
So what should traders have been watching after the close? For Nvidia, intraday price and volume follow-through mattered. A second day of heavy selling would have been a bigger red flag for broad tech risk.
And for silver, you wanted to see continued inflows and sustained volume in related metals ETFs. One day can be noise. 2 or 3 days of follow-through starts to look like a rotation.
Let's pivot to financials and market structure. JP Morgan's ETF arm published March dividend notices today. That's the kind of structural calendar event that causes predictable short-term flows.
Right. For listeners who own ETFs for income, dividend timing matters. Record dates and ex-dividend dates can change who's eligible for the payout and can move the fund price around. It's not sexy, but it's important if you're thinking about taxable events or managing short-term positioning.
Another small but instructive note. Corporate Insight handed digital experience awards to Fidelity, Charles Schwab, and E-Trade. That's a reputational win. Not an earnings catalyst overnight, but it helps with client retention and slow-burn asset growth.
A good point. In brokerage, customer experience is a competitive edge when margins are squeezed. Better digital tools can keep clients from switching, which protects assets under management over time.
On the sell side, Wells Fargo downgraded 2 self-storage names, warning about a weaker outlook for 2026. That pushed storage REITs lower during the session.
Analyst downgrades in cyclical pockets like storage matter because REITs are yield sensitive. If analysts see weaker occupancy or rental trends, they'll flag distribution and funds from operations risk, and that can accelerate volatility in these names.
So, for income investors, it was a reminder to weigh yield versus distribution sustainability. High yield is attractive until the fundamentals don't support it.
Exactly. Moving to the consumer side, Hyundai's Palisade earned MotorWeek's Best Large Utility for 2026. That award was timed with the Chicago Auto Show and can boost showroom traffic.
Awards timed to big shows are classic marketing catalysts. Dealers run incentives, adverts amplify the win, and that can lift sales in near-term windows. Small story, but real sales implications.
There was also a behavioral signal in home improvement. A piece quoting a coatings company highlighted customers choosing long-life coatings and maintenance instead of full replacement. That's subtle. But if it scales, it changes retailer and supplier mix.
In plain English, more recurring, lower-ticket maintenance spend could be good for big home improvement retailers and coatings makers. Think steadier same-store sales rather than lumpy big purchases.
Shifting to B2B, we saw integrations across HR tech and corrections tech. CIC checked. Integrated with PageUp to embed investigative screening across PageUp's platform, which operates in about 190 countries. No price was disclosed.
And Securus Technologies partnered with R1 Learning to deliver cognitive behavioral content to tablets for correctional agencies. These aren't headline revenue bombs, but they're meaningful in regulated verticals.
This cluster underscores a trend. Verticalized, compliance-sensitive software integrations expand addressable markets and raise switching costs. For regulated sectors like healthcare or corrections, embedding specialized services into workflow platforms makes it harder for clients to walk away.
2 important caveats. First, these announcements rarely include near-term revenue details. Second, the real market mover is named client deployments or contract wins a few weeks or months later. PR alone doesn't move the needle.
Totally. Speaking of small headlines that tell a story, Wonice Law's founder John Wonice earned a Super Lawyers Rising Star recognition for the fifth consecutive year. Not a market mover, but a reputational signal for a niche legal practice.
Okay, let's step back and connect the dots. Digitization plus integration popped up across several stories, from PageUp to corrections tech. Those moves are a scalable way to grow without building a huge direct sales force.
Meanwhile, PR without immediate profit clarity was a recurring theme. Awards and integrations that need follow-up. And the simultaneous Nvidia sell-off and silver rally painted a picture of rotation and hedging.
And don't forget analyst scrutiny in cyclical pockets. The Wells Fargo downgrade reminded investors that sectors like self-storage remain vulnerable to consumer health and occupancy trends.
Let's run through rapid updates before we wrap. Hyundai Palisade wins the award. Fidelity, Charles Schwab, and E-Trade recognized for digital experience. JP Morgan ETF dividend notices for March. The CIC Act/PageUp and Securus R1 learning integrations. And the legal recognition for John Wonice.
Good summary. For what to watch next session, first, Nvidia. We wanted to see whether selling continued or buyers stepped in after hours. A second down day would have amplified tech risk.
Second, silver and commodity flows. Check ETF flow reports and whether the metals move had news support. Third, storage REITs. Any company commentary after the downgrade and yield moves matter for income portfolios.
Also, watch JP Morgan ETF X and record dates for the March distributions. Plan around taxable events and who gets the payout. And keep an eye on Chicago Auto Show follow-ups for dealer incentives tied to Hyundai's award.
Finally, look for integration rollouts and named client announcements from PageUp and Securus. Those are the commercialization signals that turn PR into revenue.
All right, time for clear takeaways. 1. Short-term rotation and hedging drove today's action. The Nvidia drop and silver rally looked like portfolio rebalancing more than company news.
2. Watch follow-through. Volume and flows across consecutive days separate a one-day headline from a durable trend. For silver and for Nvidia, day 2 and 3 mattered.
3. Structural items like ETF dividend notices and analyst downgrades have real trading implications, particularly for income investors and yield-sensitive sectors like REITs.
And 4. Integrations and awards are important marketing and positioning signals, but investors should demand named clients and revenue metrics before assuming earnings upside.
That's our wrap for today. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening.
Thanks, everyone. We'll be back after the next close with another Alpha recap. Send your questions to stockalpha.ai and we'll tackle them on air.